Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Thursday edition, getting close to the weekend. Another fun weekend and an interesting day. I actually got whipsawed. I had two trades on the S&P today. One was winning, one was losing. I ended up making a couple bucks, but nothing big today. And we'll talk about the crypto stuff. We'll talk about Warren Buffett. We'll talk about all kinds of different stuff. All right, let's go into the topic du jour. That is the PPI Shock. Now, of course, the CPI number, which came out yet on Tuesday, was decent, right? I'll bring that number up here so we can see that one. Here we go. There's your CPI number for Tuesday. And all in all, no shock there, no surprise. You know, at least we're back to those highs of July of 2022 when we saw that CPI surge and hit a high price of hit a high level of 1.3% gain for the month, which is just crazy gain. And of course, that led to massive pressure by the Fed to raise rates and slow this damn thing down. Now, we look what went on with PPI today. This was a strange one. It's funny because Don Fron was commenting today on X. He's like, look, it's just they'll revise it. Not all the data is in. And that may be so. But you look at this crazy surge today. This is the highest spike in PPI over a month-over-month change we've had since July of 2022. So 3 years, we've not seen a spike anywhere close to this. The highest we had was a 0.7 in September of 2023 and February of 2023. So this is, as Steve just typed in the chat, that's a big outlier, right? This doesn't fit this picture at all. And it would lead you to believe that there probably was some data issues. Maybe somebody at the Bureau of Labor Statistics is packing their bags right now like the other person who got fired, because I'm pretty sure Trump does not like this one. This piece of data here is one that could very easily derail the Fed cut in September, right? I think there was like a 95% probability as of yesterday. Let's check it out today. It's still 92. Yesterday was 94. Today it's 92. But the difference is, if you look down here at the bottom, I know it's hard to see, really tiny. Yesterday, there was no chance of it staying the same. None. And there was actually a little bit of 5.7% chance of a 50 basis point cut in September. Well, that all shifted today. There's now no chance of a 50 basis point cut, and there's a 7.4% chance they're going to keep rates the same. In 2 weeks, we get the very telling piece, right? In 2 weeks, we get the core PCE price index numbers. That to me will be the determining factor. If that starts to show an increase and rising up, then we may actually see this whole chart here shift and that rate cut get moved off the table. Remember, inflation is one of the most important pieces for the Fed, and jobs. We've got a few more weeks till we get to the jobs piece. I'll show you here on the calendar so you can all be ready for when that happens. Let's go all the way up to the top here. So this week of the 24th is when the core PCE price index number come out. You can see right here. Am I wrong? Yeah, they're there. It's on Friday, August 29th. We get that core PCE price index. And hopefully it'll come out like the CPI number with no wild outliers. But given what happened with that PPI, I mean, you could very easily see this thing spike up even higher. Now, typically core PCE is more in line with CPI, not PPI. But it begs the question, you know, what has changed that caused producer price index to be significantly higher? And as Eric types in the chat, he says, could today's PPI be the result of tariffs? Yes. Now, I am not skilled at reading the statement that comes out from the Bureau of Labor Statistics, but I did take a screenshot of it, and I'll highlight some of the more important pieces. I know it's tough to read, but I'll read it for you, especially for the podcasters out there. And thank you, Ed, up in NorCal, for alerting me to, I didn't put the audio in yesterday's podcast. Thank you for catching that, Ed. So here's your first little bit. Oh, they're all supposed to all come on individually. Let me change this just a hair here so I can be dramatic and bring them on one by one. Is the way it should be. And it'll take me just a second to do that. And then we'll do on click. Okay. So the first one here is the total final demand. Okay, and it was 0 in June. Now you're seeing 0.9%. Normally you see 0.1%, maybe 0.2% increase. That is a giant jump. And of course, we saw the chart there earlier, which that's a pretty significant increase. The next number that I thought was interesting is if you go here to final demand. So this is final demand when you take out food and energy. So take out food and energy and trade, it still increased 0.6%, which is a big gain. I'm wondering, like, what's increasing? Rents? What pieces, if we take out food, energy, and trade, are increasing that much? We keep on going down the line here. The next big one is food. And this is on final demand goods. So food rose significantly, went from 0.1 to 1.4%. So in June it was 0.1, in May it was 0, no increase at all, and all of a sudden a big increase here. And that may have to do with some of the tariffs I do believe are impacting those prices. Surprisingly, energy stayed exactly the same. We saw 0.9 for energy. Yeah, food is definitely more expensive. It is, absolutely. Just the dinner I had last night was evident of that. Jeez Louise. Here's another one, the total. Okay, this is final demand for services. So obviously this is representing goods and services. Services jumped significantly as well. 1.1 versus negative 0.01 in June. And then trade. This is where I'm a little confused. I'm going to be honest, I don't know what this exactly means, like trade services, international stuff, but it went from negative 0.3 to 2.0. Obviously showing significant increases, and I would agree with the comment that was made earlier that I'm pretty sure that this is, a part of this is definitely tariff related, right? We're adding bigger tariffs onto people, and that's ultimately going to come through and hit the bottom line. So this is not very good for our markets, especially for those of you who are anticipating the Fed cutting 25 basis points, like myself, right? I'm in the camp of I still think they're going to cut rates in September. Remember, this is just one point of data, but it certainly is not the data the Fed wants to see. Right now, I'm sure Jerome Powell has just put his head in his hands and be like, you got to be kidding me. Like, why would you do this to me? But ultimately, remember, the Fed has said it's not PPI or CPI numbers that is what they're focusing on. It's the core PCE price index. So let's not jump to conclusions. We have 2 weeks before we get that core PCE price index number. So a lot can change between now and then. What concerns me a little bit is typically when producer price index numbers surge like that, there's a lag time where they pass those costs, those increased costs, on to consumers. So if PPI just surged for the month of July, I would anticipate that if PPI numbers surged for July, I would anticipate that your CPI numbers for maybe August or September are going to start to surge as those costs are passed on, right? Because most businesses are not going to eat the cost of a tariff. They're going to pass that right on to the consumer. So yeah, that was some pretty surprising stuff today. I got to say, I was pretty shocked that it came out that dramatically high today. I would cut and not just cut to be safe. Why? But George, you can't just cut. You can't just cut arbitrarily because you want the markets to go up, right? Everybody here as a trader, anybody here who's got investments, there's nobody in this room right now. If you take out, okay, let's strip out everything else in your personal lives, okay? I don't care what your thoughts are on the economy, on anything else. Is there anyone in this room who is, imagine you're just focusing on how much money you can make in the market. Would there be anybody in this room that would say don't cut rates? Yes or no? Everybody is going to say cut rates, right? But there's unintended consequences of that. Look, I'd love them to slash rates from right now all the way down to zero. Because what it means, my investments would skyrocket. My investments would just go through the roof. Love it. But that would do so much damage to the overall economy because we're already in a fragile balance with the uncertainty of all these tariffs. So, I agree with you, George. We all want it to be lower, but we have to think about the overall good. And I think what separates this audience from most others is we understand these mechanics. We understand these relationships. I think that we all understand that if there's a significant rush to cut rates, that could have a profound impact on the markets later on. That could lead to, much higher inflation. That could lead to bad things. So let's try to have some stability there. And I think that that's where Jerome Powell is basically saying, look, I'm data dependent. And today's data did not help this argument at all. Obviously, I want him to cut rates just because I'm bullish. I have long-term investments. So let's juice those things higher. Margaret was asking about that 10-year yield today. We erased pretty much all of yesterday's gains for that 10-year yield. We're at 4.289 right now. That was an increase of 1.25%. But I think a lot of people the knee-jerk reaction was, oh, shoot, that rate cut is now in jeopardy. And we saw not really big down days today for the NASDAQ or the S&P. I mean, they were relatively unchanged. Today, that NASDAQ was down, it was down 0.23%. Now it just switched to down 0.07. With your S&P, they actually look fairly strong. K. Sweeney says, why would you cut rates right now? Because if you are the president if you are the Secretary of the Treasury or whatever party it is that's in power, you want this economy to do well. Most people are going to be dependent on the cost of goods. So if all of a sudden, well, let's not say that. Most people obviously are dependent on the cost of goods and services, but a lot of people have a 401k and investments accounts. And when they look at their account going up and making money, that will soften the blow of going to the store and realizing, oh, I'm spending 10, 15, 20% more than I did last month, right? So if you can juice the equity markets, if you can make the economy surge and make all of the businesses succeed and have the richest economy in the world, you can pound your chest and say, did you see what I did? Did you see what my administration and what my party did? It's a gloating thing, right? No one wants to. I doubt there'd be a president that would come out and say, hey, you know what? I'm concerned about this latest PPI number. That number is really high. I think we should raise rates to slow it down just in case inflation gets out of control. There's no president alive that would ever do that, because if you did that, the president's basically saying, slow down the markets, slow down the economic growth, slow down the increase in my 401k plan, and that could actually start to slow down the economy, which means more unemployment, job loss, and no president wants that on their conscience. So they want rates at zero as long as possible, because if you keep rates at zero for 4 years, it's not going to destroy the economy. It'll juice it. It's when you keep it at 0% for 8, 10, 12 years, you really see a dramatic impact. So not a political statement, but Trump doesn't care if rates get cut to zero, because if that damages the economy, he'll be long gone by then. He'll be long gone by the time it impacts. So what he wants is the legacy of let the market rally, put my stamp on it, and people can go, Trump was the best ever, right? That really, how many presidents talk about PPI and CPI? I'm sure not many, Lisa. I'm sure not many. I'm sure not many. I would venture to say that Trump is pretty versed on it, because, he's obviously been pounding the table on inflation and cutting rates. All right, Noam says, do you think today was the beginning of the bearish trend, being that we are headed towards the end of red August? The beginning of the bearish trend. Well, let's look at the S&P. I still am not of the mindset at this point that we see any justification for a market correction. Everything looks pretty good right now, right? If we can continue to get deals made with China, with Russia and the Ukraine, or get locked that one down, if we can get Canada and Mexico to be solid, sealed, signed, delivered, here's our trade deal, no matter what the numbers are, I think it's really beneficial for the markets overall, because that looming uncertainty. And once you have all these countries lock in and say, here's what we're paying or not paying, then we can focus on the other issues. So it's like that giant looming uncertainty that the Fed has been holding on. Remember, the Fed's been saying we're data dependent, and the tariff issues, we just don't know. And rightfully so. None of us here can make a statement that says we know exactly what's going to happen because of the tariff impact on the economy. We can speculate, we can hypothesize, but no one here knows for certain how this is going to impact the economy overall. I think that today's PPI numbers might be a little bit of foreshadowing here. Now, today was 1 point data, right? We saw that one big spike. Let's go back to today's number. So you got that one big spike in PPI today. Okay, that could be an outlier. And as Don said, maybe this gets revised down. It gets down to 0.5 or something like that. But still, you look where we have been for the past 6 months. Since March of 2025, we only had one blip above zero, and that was 0.1%. Everything else is, below zero. That's fantastic. But all of a sudden, we get this big surge. Now, what will be interesting is the next PPI number. Okay, of course, we are still looking at what the Fed is going to do, anticipating what the Fed's going to do. As we jump into the September month, I believe it's the week of the 7th and the 10th. Here's the next reading for that, is September 10th. So this next PPI number comes out literally 8 days before the Fed has to make their choice. So between now and then, we get the core PCE price index on August 29th. We get the PPI number on Wednesday, September 10th, and we also get the next CPI number on Thursday, the 11th. So those are going to be major pieces, not to mention Friday, September 5th, when we get our unemployment rate. That is going to be another big number there. Right now, I'm not so concerned about that one, but any little blip there could, wreak havoc on the potential for this rate cut. So To me, it's an outlier. It's one-off data, but it is make you raise your eyebrows and go, whoa, okay, where did all that come from? And it might get revised down, but I can't imagine it being revised down so much that all of a sudden it looks like a positive thing. Right? It just looks too gloomy. Yeah, Stephen, lots of data coming out before that next FOMC meeting. And, this might be the biggest pressure Powell has had on himself in years, right? There's going to be a lot of people, really expecting him to cut rates. I mean, if you just look at the Fed funds futures right now, it's pretty clear that everybody's expecting him to cut rates. Even though it's changed over the last 24 hours, this is not very good for the grand scheme of things. So let me read this question that came in from Les, which I did not get to yesterday. He says, if the PPI numbers come in higher, how would that affect the interest rate debate? Well, I think we've already covered that, Les. If they did come in much higher, the way that PPI will impact that inflation debate is most likely, if you're just doing PPI, right? If we did this based solely off of PPI, today's data would say absolutely no rate cut in September. But there's other factors, right? But if it was only PPI dependent, that number today would have been like, we are not cutting rates. We may actually look at raising rates if it's that high. How would that affect the interest rate debate? Okay, I see that the jobs numbers were in line. I see that on the CME, yep, you saw the numbers we saw there today. My question is about retail sales tomorrow. If they come in strong, will that help the debate about no change in interest rates since the consumer remains healthy with job, but inflation is starting to show itself? Correct. I would say that's probably going to be the case. Now, let me go over here and show you retail sales real quick for mañana. Okay, so here's the 15th. Here's your retail sales numbers. And again, this one's always very erratic, very choppy. But the last reading was above zero, is at 0.6%, which is great. If we get a strong number, let's say above 0.6, right now the expectation is we're going to stay right where we are at. It's a sign that the consumer is spending, which demand is a good thing. That drives GDP, but the more demand we get, if it's a surge in demand, again, that could add some inflationary pressure to the market, right? If you have the same amount of, if the buyer is buying more of the same amount of goods and services, that drives up price and ultimately becomes inflation. So I think that a good retail sales number tomorrow may support the Fed keeping the rates right where they're at and no need to lower it, right? All right, let me see what else comments. You guys are flooding me with comments here today. Luis says, and those numbers were low because companies bought excessive products before the tariffs. Now they have to pay. Yeah, right. And I don't know the exact extent to which businesses, went out of their way to buy stuff before a tariff hit. We know that, Apple smuggled in air loads of iPhones from India before the tariffs hit. And, how did that impact them? I'm not sure. Let's see what else I got here. I'll get to Ethan in a second. Mamon says, what if they lowered interest rates, but at the same time raised the reserve requirements, which have been at zero since the pandemic? Well, it's a good question. Honestly, they should raise the reserve requirements, but unfortunately, if they raise the reserve requirements for banks, that could create a systemic shock. And right now, you don't want to create a systemic shock. So, I don't know how to answer that one, Mon. It's a speculative thing, because if they lower interest rates, which the pressure is on to do, right? The pressure is definitely on to do. Tomorrow, I'll update my table of all the factors I think are impacting the Fed, and we'll look at what that ultimately looks like. The pressure is on them to lower the rates, but if you lower rates, that makes capital more easily available, right? Makes it a little bit cheaper. People can get cheaper loans, etc. It helps the housing market. But if you raise the reserve requirements, that means that banks can't lend out as much. Now, who knows? I don't trust the banks anyway. But they should at least have 5, maybe 10% reserve requirements. Now it is 0, which is not a great thing. Is restaurant activity included in retail sales? Yes, I believe so, Naum. I'm not 100% sure. Unfortunately, I've never really dove deep into the BLS stuff. I just look at the high level numbers, etc. So we said, jump on the bandwagon, my wife Sarah. All right. We did see the mystery stock. So let me go into that one real quick. Let's talk about this. I'll shift. So there was all this talk yesterday about Warren Buffett bought $5 billion of a mystery stock. And conveniently, I purchased some UNH today. I bought 600 shares of UNH. And I've been hearing all these rumors that it was UNH. And I am blessed that I got lucky on that one. Fortunately, I didn't sell covered calls. I was going to buy some and then sell some covered calls against it. But he came out today came out after hours in that 13K report and revealed that he has purchased $5 billion worth of UNH. And this goes back to, I think Big Ev and I were talking about in the past, that at some point this stock's going to become a screaming buy. It's way too big to... Yeah, I got lucky, Lisa. It was very speculative. Very, very speculative. But this isn't the rumor. This is the fact. It came out after hours today, and now it's up It's up $21 in the after hour session. So thank goodness. That's going to be a great day for me tomorrow. Sure, Kenny, beers around me, no problem. 7.8% pop, and we'll see what that does in the tomorrow, right? Because this obviously is a lot of institutions and retailers jumping on the bandwagon, but it really depends on how the market perceives this tomorrow. Now, I was going to sell some covered calls against this. I'm going to wait because I think that this is the type of thing that turns around a company. I look back at when he bought Bank of America. Now, of course, that was a very different time. Let's go look at Bank of America. You guys might remember this in 2009, which, of course, we're talking eons ago. But he bought BAC. And he got all kinds of special deals there. But let's go and look at Bank of America in 2009. I know, we're going way back in time. I was just a wee little lad. But here you had Bank of America was down 95%. Shocking. It was down 95%. And so at some point back in February, March, I don't remember exactly when it was. Somebody could probably research it. He bought billions of dollars worth of Bank of America. He also got warrants on this one, right? He got warrants that said I can buy more later on should this improve. And that ended up being the bottom for Bank of America for quite some time. I mean, that was when it was down around $3, $4, $5, and here we are at $47 today. So not that I'm guessing that UNH is going to have any sort of move like that, but just looking at how much it has fallen since that crazy assassination issue, and I do think they have federal problems, but they were down 61%. So here's Warren Buffett buying a value play, as I think we've talked about quite a few times on this program, that this is not a random biotech company that's creating some, insulin drug or some .com company or a blockchain company that's just got a one-dimensional product. I mean, this is healthcare, and we all know healthcare is ridiculously expensive. I mean, I've been getting a whole bunch of health work done lately, and my goodness, it's been an expensive month for me, and that's with insurance. So, yeah, I think that this might be the bottom in for UNH for quite some time. I'm happy with it because now I've got 600 shares of it. We'll see how it goes. And maybe in a week or two, I'll sell some covered calls against it. But I think that the trajectory of UNH has bottomed out and turned around. You got to think about this. Warren Buffett is a very smart man, but it's not just him. He also has a team of amazing people on his staff to analyze this nuts and bolts. Here's the interesting part. You guys tell me yes or no. Do you think that Warren Buffett would invest $5 billion in a company knowing that that company was about to get crushed by 2 federal lawsuits? Would you think he would he commit that capital if he knew that they were going to get crushed by federal lawsuits? Yeah. In my opinion, it's a hell no. He's going to go in there. He's literally there with their team right now going, okay, are we going to settle this with the feds? Because I'm not buying anything until we got that out of the way. I wouldn't. I'm pretty sure he wouldn't either. So it leads me to believe that we'll probably see in the coming days or weeks a settlement on both of those lawsuits to clear them. Yeah, they do exist, Lisa. But my guess is, unbeknownst to you and I, my guess is that those are already being resolved. That Buffett's probably gone in there and said, okay, I'll buy $5 billion worth, but let's earmark $500 million to pay this one and $500 million we'll settle that one. This will all be done, and now we can move forward. And I think that's probably what happened. And Steven says, I think that the Fed lawsuits are baked into this price. I don't know necessarily if they're baked into the price, maybe, but I'm pretty sure Buffett, yeah, exactly, Steve. I'm pretty sure he's already negotiated this. So this makes me feel pretty good about UNH today. And I got lucky on the timing. I got lucky on the buy price here. So we'll see what happens over the next few days. I really do think this is the turning point for, I think that the low is in. When you look at that price chart, I think that's the low point we're going to see. And as Margaret mentioned, it is relatively low volume. We're not really seeing a surge up here. Now, you will tomorrow, right? Because when you add in the 5-minute chart here, you look what happened after hours, you already have monstrous volume pouring into this thing in the after hours. That's not you and me, folks. That's institution stuff. So big money is running back into this thing, which has caused the big surge here tomorrow. We'll see what happens, because I'm gonna go out on a limb and say that retail investors, having read this news tonight and not knowing that they can buy in the after-hour session, are putting orders in on Robinhood, putting orders on Schwab, putting orders in on Fidelity to buy UNH based off this news. Because when people hear that Uncle Warren is buying something, they buy it. It's just like moths to a flame, right? And he knows that. He knows that, which is why he hasn't said a damn word. It doesn't say exactly how long he's been buying this, but my guess is, when you look at the price chart here on a daily, my guess is Warren has been buying for about the past 2 weeks as this thing cratered down. I have to go to the intraday charts to buy UNH, not daily. All right, Buffett probably bought UNH at $300 based on Q2. Maybe we'll get. I didn't read through it on his 13K to see when exactly he bought, but they'll update and they'll show you his average price. I'd be surprised if it was 300. It seems a bit lofty, but either way, it's great knowing you got Warren Buffett in your corner, right? Going long UNH right now was certainly a gamble. It was certainly a risk, but I felt comfortable with it because I just feel like it's bottoming anyway. But also, just felt like this is a value play, a way big value play. There's always a way. If only we knew. Yep, exactly. Yep. There's always a way. Okay, what else do we have for today? Oh yes, let's talk about a little bit of pain. I don't see Big Eb here. Big Eb, you're not here today. You're feeling, he's golfing. He's golfing. I was going to say he's probably feeling depressed because crypto got cut off at the knees today. And why was that? Well, it was because Scott Bessent was on CNBC and he said, we're not going to be buying any Bitcoin. We have a strategic Bitcoin reserve, but we're not buying any. And a lot of people are expecting Scott Bessent to come out and say, here's our buying strategy. We're going to buy billions of dollars worth of Bitcoin. I was not in that camp. Here's the camp that I'm in. Follow on X, Senator Lummis, right? Senator Lummis from Wyoming, I believe. She has been pushing this bill through that is designed to get the U.S. government to buy 1 million Bitcoin. Now remember, there are only 21 million in existence, right? It's crazy. So if the government buys 1 million Bitcoin, first off, where the hell are they going to get it? All right. Even Michael Saylor's only got 611,000, right? You're not going to get a million. If they agree to that, then Bitcoin's going to be well over 250,000, right? Well, we could be nearing $1 million per Bitcoin. Now, is it close? No. However, President Trump has talked to Senator Lummis about her bill to buy 1 million Bitcoin, and he is actually supporting it. Now, it doesn't say the extent to which he's supporting it, but he's in favor of it. And of course, as I mentioned yesterday or Monday, we know that Trump owns Bitcoin. We know that his family owns Bitcoin. We know that his World Liberty Financial owns Bitcoin, and we know that Truth Social, which is a heavy investor in Bitcoin, this would be a massive pump for Trump of his own assets. If Trump signed some executive order that said, we're going to buy 1 million Bitcoin, it would benefit him immensely. Immensely. So, keep that in mind. Scott Bessent may say, no, we're not going to buy any, but President Trump has a lot of power and a lot of sway, and he might be able to push something through. So I think what happened today is the markets were expecting, or at least a lot of people out there, aside from myself, were expecting, more positive news here. And that positive news being that we're going to have a Bitcoin treasury and the government's going to buy more Bitcoin. And I do not think that's going to happen right now. I think that's going to be further down the road, maybe earlier next year. I think the discussion will get better, but I think that's why you saw this just crush today of Bitcoin. Don't worry about it. It'll be okay, right? It's not that big of a deal. It's the long-term perspective. Remember, it's not about the government having a strategic Bitcoin reserve. It's about adoption, which is about Bitcoin treasuries. It's about companies holding on their balance sheets and all the different factors I mentioned yesterday, especially in all my cryptocurrency sessions I taught, how the Genius Act creates the stable coins. The stable coins boost something like Ethereum. That brings more money into the ecosystem, and naturally all of crypto is going to rise with that. So don't worry about Scott Bessent's comments today. It may actually have created a buying opportunity for some of you that missed this rally. Margaret says, Trump needs to disclose that his family is heavy into crypto. I think that would be the prudent thing to do. I don't know exactly. Let me see here real quick. I wish I had a microphone set up, but how much Bitcoin does DJT hold? Remember, he is a major shareholder in DJT stock. So according to CNBC, DJT has accumulated approximately $2 billion in Bitcoin. Okay, so that's DJT. How about World Liberty Financial? Oops. World Liberty Financial. World Liberty Financial is purchasing 1.5 billion of it. So they've already got, just in those two companies, 3.5 billion. 3.5 billion. And now you look at all his other stuff. And you're right, his son's got some. They've got some. They don't have to disclose it. But those are pretty big sizes. And you could imagine if all Trump has to do is make sure all his family's got enough crypto. And if he says that the government's going to buy 1 million Bitcoin, guys, you should all own some Bitcoin. I can't say it enough. Because if that happens, where's he going to get it? You're not going to buy this on the OTC market. So if he comes out there and says the government's going to buy, 1 million Bitcoin, you're going to see this line not only look like this, but over a short period of time. Now, remember that bill by Senator Lummis is not to buy 1 million today. If I remember correctly, the bill was to buy 1 million over the next, I think it's 5 years, and then they can't sell it for 30. So Senator Lummis is really trying to do what Michael Saylor is doing. We're going to take money out of government coffers, borrow it, issue more bonds. We will buy Bitcoin, put it on the books of the U.S. government as an asset, and as we continue to do that, it drives the value of Bitcoin higher and higher, and they're going to hold 1 million of them. So it's an interesting play. It certainly puts them in a power position, but it also puts a lot of U.S. equity and wealth in Bitcoin, which, you never know what could happen. This is a digital instrument. I don't believe it can be hacked, but you never know. Michael says, so you like DJT? Not really. I mean, it's a treasury. They're trying to buy more and more Bitcoin. I'm not a big fan of DJT. I don't think Truth Social is a great platform. I don't think that it's got anywhere near the users or profitability that you see on X. I'm definitely much more of an X user. So, yeah, I'm with Stephen Wolf here. He says, just buy Bitcoin, stay away from DJT. I would agree with that. Especially when you know that you can buy Bitcoin and you can take it off of the exchange and you can own that. You can have total control. Like, I can keep it on the ledger and it's mine. No one's going to take that away from me. So that to me is a way better way to go. If you're a believer that Bitcoin's going to continue to move up and you cannot buy Bitcoin outright, then go with IBIT, right? I would not do BITO. I don't like the futures products. I'm anti-futures products. I would go with IBIT, which mimics Bitcoin pretty clearly. So to me, that is the best way to go. As Al Kazir says, the Bitcoin ETF. Yes, I would use IBIT there for sure. Absolutely IBIT. Yeah, X, man, I'm telling you what, and X is doing amazing things, especially because now you're integrating AI into it. I don't know if you guys have played with Grok, but Grok now just made the announcement that you can do as long of videos as you want. I'm limited on Midjourney to 5 seconds. Now, it may change, but with Grok, you can make his videos as long as you want. Pretty cool. And that's bundled into X. And pretty soon, you're going to have a stable coin issued by X. I'm pretty sure that's going to happen. And they will become X Financial and do a whole bunch of other products and services. You're going to get basically a one-stop shop with X. You have social media. You can pay for things there. You can buy media on that. All done through... I'm more interested in Fartcoin. The ridiculous thing about that, Alcazar, is let's go Fartcoin. It's just so ridiculous. This is actually something. This is a meme coin called Fartcoin, which is just a joke. And the fact that someone buys this for $1 just shows me that idiocracy exists. This one is absolutely useless. There's no point to it. Just like Pepe. Even Pepe on their website says, this cryptocurrency has no purpose, has no value, doesn't serve anything. It's a joke. You guys are hilarious today. So yeah, I'm definitely going to be investing in things that I feel have a future, a product, a service. Like one of my new ones, one of the new ones I just bought, I bought some AMP AMP. All right, not good today. I bought this a couple weeks ago, so I'm not sure exactly where I bought it. But, AMP is a speculative one for me. But they actually have a product. They're actually doing payments with crypto and digital assets. So that was like a speculative one. Let's see, what else did I buy recently? What else did I buy? Oh, I bought HBAR, Hedera Hashgraph. This is a different type of blockchain structure. Fortunately for me, it's had a pretty significant run. But, I'm definitely buying projects that I feel have a future. They're doing something to change the financial world or infrastructure, but most of the stuff doesn't do anything. I mean, there's over 30 million cryptocurrency projects, and the majority of them are garbage. So, as far as crypto goes, yeah, today was a painful day, but let's be honest. The last couple months have been fantastic. So let's not worry about one day. It's not that big of a deal. All right, let's go. Naum says, who decides to split the prices? I believe that is a board decision. So it would be the board of the specific company that makes that decision. Tesla needs to split. No, it doesn't. It's no way. Tesla's only, what, $330? Nah, it doesn't need to split. That's not bad at all. There's other companies out there that have way higher price points. And I think that, that should be one of the big points there is if something is like over $1,000 per share, then yeah, that one might need to. Like you look at Booking. BKNG, right? Let's look at that one. Here's BKNG. I mean, this is at $5,484 per share. The average Robinhood guy can't touch this. So if I'm the board of directors of Booking, I'm doing 100 for one split. And why would I do 100 for one split? Because if I do 100 for one split, this is still a $54 stock. But now Robinhood kicks to buy it. Can't buy this at $5,000. So yeah, there's a lot of companies out there. I can pull up a list here if you want. I mean, look at some of these other ones. AutoZone's trading at $3,900. Seaboard, it's $3,500. Any big ones in here? Fair Isaacs, $1,300. Netflix, $1,200. Jim Cramer's got to be loving that. Costco, almost $1,000. Those need to get chopped. But a $300 Tesla? Nah, come on. You just want it to split so you can say I got more shares. Carvana. Carvana, that just blows my mind that Carvana is at this price. Unbelievable. Like, if I had more chutzpah, I'd be shorting the hell out of Carvana. It makes no sense to me how this thing is taking off like this. Crazy. All right, one other thing. Let's go into Naum, who's here today. Naum asked this question. He sent this one in on, I think you posted this on the YouTube channel. Anyway, Naum says, I'm going to invest heavily in ALTS. What's your opinion of this stock? I created a graphic for you. I think you are playing with fire. You're playing with fire. Now, if we know what ALTS does, ALTS, these guys are trying to set up blockchain infrastructure, and they're now developing payment systems, and they have software where you can trade through and, basically they're going all in on crypto. Here's why I don't like it. I don't like a company that, as of, let's say 6 months ago, was a biotech firm. These guys were looking for, non-intrusive opioid replacement pieces. I don't know exactly the details. That was what I was reading. But they were a biotech company. And now all of a sudden, they're like, hey, we're doing really bad as a biotech company. We're not doing very well. Let's get into crypto. Yeah, let's do that. Let's do crypto or AI. Crypto's easier. So they go out and they're like, we're going to do all this stuff with crypto. Their website looks actually fairly decent. I'll give them that. And you said you're going to invest a lot of money in here. Look, it's up to you, right? You want to buy what you want to buy. If you look at, you said you're going to invest heavily. I would not invest heavily. Maybe I would do a small portion of my portfolio, right? A little bit in there, and I would look at it as a gamble portion of the portfolio. I certainly would not go all in. I certainly would not do a large position in this. You just don't know what's going to happen. Again, they've recently just switched over their model. The chart does look good, right? You've got a nice uptrend going since mid-2023. Higher highs, higher lows. It does look good. But I just don't like a company that's jumping ship. Their entire business model has shifted. It still lists that they're still doing biotechs. Now you got a company that's bifurcated into biotechs and into crypto. So, I personally, I'm not going to touch it. But, to each their own. And what else did I see pop up in that chat? At least ATNF has Peter. And that's a big piece. When you look at the names, Peter Thiel is that's not That's not the one I wanted. If you look at, it wasn't that one. It was, what was the one he had yesterday? Bullish, right? When you look at those companies that have major backing from major VC firms, especially somebody with the pedigree and track record of Peter, yeah, there it is, Sophie, BLSH. It's hard to bet against him. So if Peter Thiel's involved, I'm usually a fan, especially after reading Elon Musk's book. Yeah, Peter Thiel had a big impact on Elon Musk's, I would say, business acumen, and really was a mentor to him. Okay, so now that's my view on that. And again, it's just my opinion, man. Don't change your course of action. All I would say is don't go overboard, right? Don't go all in on something that doesn't have a track record, that's bouncing around. It may sound great, and I'll be honest, their website looked pretty good. It just makes me nervous, and I hate to see you get burned. And I know what's going to happen now. You're going to put a little bit of money in, and this thing's going to go like 100x in a week, and you go, Merlin, you suck. I don't like you anymore. Just the way it is. All right, let's go into our top markets here, and then I'll work our way from bottom to the top, and we'll wrap this show up. I got to look at Pfizer because Michael was asking about that. And what do you say about Pfizer? He says Pfizer this year is beating earnings. That the dividend has helped the last week. Yeah, look, it's starting to change trajectory. And when you brought this one up to me, I was like, it looks like dog do. I wouldn't touch with a 10-foot pole. But what did I also say? And I always say this: if you've got something that's in this just predominant downtrend, you have to stay short. Now, that didn't change until right there. So this all slowed down and potentially showed a reversal on June 12th, right? Because we're making higher lows, and you're breaking through a swing high. So that is a pretty important pivot. And now all of a sudden you're making, well, we did dip back down below. That's not great, but I would say Pfizer is looking much more attractive than when you first brought it to us, Michael. It looked like garbage when you first brought it. And I don't care about the dividend. I do not care about the dividend. If some, people, and Steve just did it. There he goes. I do on Pfizer. The dividend is 8%, so at least there's that. And what usually bugs me about that, Stephen, is people like, oh, well, I'm making 8% dividend this year. Okay, well, right now, as of this year, it's down 7.44%. So even when you take the dividend, you're only up 0.56%. Not great. Not great. And last year was way worse. So and this is just a matter of style. Some people like dividends. Some people like that income stream. I'm not a fan of dividends. I think that's just a distraction. I'd rather be in something that doesn't pay a dividend and gives me, significant underlier growth. But that's, value versus growth investing. All right, let's start at the bottom here. We already talked about Bitcoin, which was just a bit of a mess today, getting crushed because of Scott Besson's comments on CNBC, but I'm not too worried about that. Moving up the ladder, Russell had a great engulfing pattern today, a Harami pattern today after 2 stellar days. I mean, wow, just a monumental move for Russell over the past 2 days, and then gave it back today. Down 1.32%. Technically, that is a reversal pattern, so keep your eye out for a potential short down below. Gold. Gold, look, it's still just traversing sideways in this. I took the yellow box off here, but it's just really just bouncing sideways in between those 2 green lines I have on your screen, between 32.70 and 35.09, and we're dead center right now, so no big deal. I will just leave it alone. NASDAQ, down 0.07. Look, second day in a row of a spinning top. These are a doji pattern, which basically means it open and close right at the same price. That's not good. That really means that people don't know where it's going to go. The good news is, for those of you who are bullish, we're not seeing profit taking. So after a big run like we've had since August 4th, you would expect there to be some profit taking. In this case, we did not get that. That is actually pretty positive. S&P, similar picture, although more positive than NASDAQ, was up 0.03%. This is a hanging man pattern, which according to Steve Nissen is a reversal. I believe it is a continuation pattern. So here's where I differ from the big guys. That looks like a bullish move to me. At one point, it was a big red candle, closing green right near the highs after a big rally. That looks to me like momentum going to surge. We'll see what happens tomorrow. Okay, podium time. Dollar index up 0.44%. Look right where it bounced, man. It is not closed below that trend line we've got on our screen there. It tailed below it, but did not close below that trend line. So this is a pretty pivotal point for the dollar index, guys. We'll see what happens over the next couple of weeks. Does it continue to rally up here and stay with that trend line? I believe that it will for now. And your 10-year yield, which you already looked at, we had an about face of 1.25% today, bringing us up to 4.289. And finally, crude oil. Man, I didn't pull the trigger. I'm too skittish, man. I told you I was thinking about selling some puts on USO. I did not, and it was really going to be based off this lower demand zone. Great rally today, up 2.09%. I could simply just stand here and say I shoulda, coulda, woulda, but it makes no difference. I did not sell any puts on oil, so I am not capitalizing on that move today. Unfortunately, I hope some of you did, because the demand zone was decent. It wasn't great, but it was decent. Okay, let's go to your economic calendar for mañana. We already talked about the retail sales numbers. There are a couple other small pieces. You see we have capacity utilization rate. You got the Empire State Manufacturing Index, which is going to give us a clue as to how New York is doing. Probably not so good. Industrial production as well, and then the University of Michigan Consumer Sentiment Report, and that is pretty much it for mañana. And what else did I have to talk about? I think that was pretty much it for me today. Yeah, Margaret, I'm having a relapse. I'm missing someone a lot. But I'm trying to be positive. It's a tough one when you just don't talk to your best friend. Actually 7 years of my best friend, and I don't talk to her at all. Zero. That is just brutal. Really, really difficult to do. But we are doing my best to keep my chin up. Okay, that's going to do it for me for today, everybody. I appreciate the comments. Naum, thank you for sending your comments in. Also, Les, about the PPI number. Sorry I didn't get to it earlier. Today it was a PPI shock, and I think it's important for us to, be aware this is 1 point data, and we really have to just kind of keep our eye on the next numbers that come out, which you mentioned will be August 29th, and then you have the unemployment numbers on the 5th of September, and then early September on the 10th, we also get another core PCE price index number and PPI. So we'll keep our eyes on those data points. That's going to be all pretty big stuff. For right now, still looking pretty decent. I think the S&P looks like it's going to be a bullish move. We will see. Play it by ear. So thank you guys so much. Have a you a sale on Intel? Nope, I haven't got that one yet. All right, that's going to do it for me, everybody. Hope you enjoyed. If you have any comments, things you want me to cover on tomorrow's show, you can email me at tradermerlin@gmail.com, as many of you have, or put your comments down below any of the YouTube videos. As always, I do like that you guys have been talking and promoting and sharing the show. It seems like we have some new viewers out there. So for those of you who are new, you can always click that subscribe button, hit the like button, and I will see you guys tomorrow. Take care.